So welcome again, guys. And this will be the last video I'll talk on market structure. Last video I'll talk on market structure before the liquidity aspect. So I'll do a summary of the previous market structure and a clear insight of it, and then analysis of our some trade. So like I said, I used two type of market structure. Advanced market structure. Advanced market structure use advanced structures. Exactly. Uh, one. So the advanced structure of my strategy are one, market structure shift. Market structure shift, or a control change of character. So I'll call this chart trend reversal. The second one is a break structure. I can call it the break structure. Try to structure is my strategy. So technically speaking, this is it for market structure. This is it. I have something like this. Is for market structure. Here is the market structure. MSA market structure shift. Shift. Market structure. Market structure shift. Then the other one, my second structure I use. My second structure is a break structure. Break structure, double break structure. Break structure, double break structure. These are the two structure I do use. Break structure or double break structure. That is the structure I do use. So the purpose for market structure is that whenever I come to this chart and I'm seeing a market structure shift, what will I do? It's telling me to take a reversal. Market structure shift. I explained that, I think I explained that in the previous video. Market structure shift. It's reversal. Reversal of the current trend. Current trend. Indicates the reversal of that current trade. Well, you come to the market and you're about to take a trade. So you come to the market and see this market sources. It's trying to tell you that that current trend is about to change. Immediately, market was on buy trend, and you see that later you are seeing the market structure shift. It's trying to tell you that the buy trend is about to change from that buy trend. Market about to shift from that current buy trend to the sell trend. Structure for a sell. This is structure for a sell. Images for a sell. This market structure is for sales. Market strategy is for sale. Market strategy for sale. Is for sale. And this is for buy. For this one, reconstruction for sale. Reconstruction or double reconstruction or double reconstruction for sale. For sale. Then reconstruction, reconstruction, reconstruction. Indicates trades to continuation of the trend, continuation of the trend, or the trend. So reconstruction was a reconstruction. It's the kind of structure used to which tell me that I should continue in that trend, that current trend. I should take trades to continue in that current trend to follow the trend. When I come to the market, there are two things I look for: either to join the trend or the market, or to join the that trend is about to change, and I will join the reversal of that trend. So when I come to the market, I'm seeing because market structure shifts, I want to join the reversal of that trend. I'm seeing breakout structure, I want to join the continuation of that trend. So let's quickly dip down on market structure shifts. For the market structure shifts, while the market was moving, moving like this: lower low, lower high, lower low, lower high, lower low, lower high, lower low, and something market break the recent lower high. Let me indicate them. Lower high, lower high, lower high, lower low, yeah. Lower low, lower low. And take note before market structure shift. Market structure shift, before market structure shift, they must make a break of structure, like it must break the recent low, break with the body of a candle. There are rules I said. It must break with the body of a candle. For a break of structure, it must break with the body of a candle, not a wick. So it must break for a market structure shift. Listen to this. It must break the recent low, the previous recent low. Must break a break of structure at the bottom. So it does. When by the time it breaks the recent lower high, previous lower high, after breaking the recent previous lower low, that's the time I consider I have the recent lower low as a market structure. It doesn't break this recent lower low with a body. It is and it's break this recent high. It is not a valid break of structure MSSCS. Also break this recent lower low with a body of a candle, and also as well break the recent lower high with the body of a candle. These are MSS. As MSS, as this recent trend, markets coming in a lower downtrend. Now it's indicating that market is no longer on downtrend, but it's about to take another trend. So like this, my entries are found inside order blocks and breaker blocks. But this and this and all, this is a breaker block. where the MSS is coming from. Breaker block. And here is another block. On that block, I have institutional traders place their limit order. A breaker block is a free order block. Another block that failed to hold. You know why? Because if you look at this, this is a supply zone, demand zone, supply zone, demand zone, supply zone. Like this lower high is a supply zone, lower low is a demand zone, trying to push the market up. Lower high supply zone, demand zone. Look at it here. This is demand zone that failed to hold. The market broke it. It is now called a breaker block, whereby market came back and used it again. This is a demand zone that failed to hold. I was also push market back, but failed to hold. Market break into it. Market came back and retested that demand zone, which has turned into a breaker block and sell from there. Same thing the opposite side here. By the time market break using lower high, I was supposed to push market down. It is now called a breaker block, which is here. So you see that you can take your entry from here, or you can take your entry from here. So now this is where the rules comes in. Rules of knowing where to take your entry. So there are 4 rules in picking your entry. 4 rules in picking your entry. The 4 rules are 1. The first rule is that the first rule is 1. Look for the market shift or the market shift or a break of structure. Market structure, a break of structure. So whatever one you see at the market first, but so inducement liquidity. Inducement liquidity is your first pullback after a break of structure or a market structure shifting. Market structure shifts. Inducement liquidity. The third one is your POI, your peak interest, your POI. What of interest? There's your POI. Or you want to get it. Then the fourth one is fixed POI. Just liquidity. Inducement liquidity. POI causes your inducement liquidity. So now with these rules now, first of all, look for a break of structure and market structure shift. So here we are having a market structure shift. Let me remove this. Market structure shift. Maybe we have something like this. POI is breaker block and other block. But my entries I might have 30 entries because I refine my entries. I don't really use breaker block or that block. My entry model I just find this other block and breaker block. So with this now, we have an MSS here. Then after I break a MSS, which is this break of structure, shift. The next thing is our inducement liquidity. This first pullback after I break of structure is our inducement liquidity. That's why I'm using liquidity. And liquidity. So let me express some candle with another block for a sell that block. This another block. Another block for sell, another block for sell or for buy. Let me talk about buyers first. This is a buy order block. But if I buy that block, we have a bearish candle. I have a bearish candle that's engulfed by a bullish candle. This is sell. This is a buy order block. So then for a sell order block, we have a bullish candle that's engulfed by a bearish candle. By a bearish candle. So you mark for me from the mark when you want to mark a bearish order block, you mark from the recent on the black candle for the bearish candle. Mark the both the wick together. For bullish candle, for a sell order block, you mark from the bullish candle. Mark both the wick together. It's for a sell order block. So I buy order block. And these are sell order blocks. Double. Order block, sell order block. So where does the breaker block then come from? The breaker blocks and order block are fit to hold. Rally, we are selling. Market mid MSS here, reproduce inside. Okay, do something like this. So by the time market break this order block as supposed to push market down, we then refer to it as a reconstruction or a double reconstruction. Or a double reconstruction. Okay, but we mark it for me. This one markets will give our first pullback into my liquidity. Pick here. Goodbye. To join the continuation of the trend. Value or something like this. think here should be a clear view. So yeah, so this if it's maybe this addition for other block and a few other block. So probably markets were making a recent lower low from this place. Was making lower low, lower low, lower high, lower low, lower high, lower low, lower high. And market pull back, break this recent lower high. For a an MSS, call it MSS. And that is the only one it has break the recent low. That's when you break the recent lower low. Breaking below the recent lower low. Then for now we'll not be using at this point our first inducement, that's our first pullback which is inducement liquidity. First pullback after our paper structure is this. It can be a single candle, any candle at all. So long after the candle break this, the first pullback is after the candle break the paper structure or an MSS. The first pullback can be a single candle set. It's first pullback. It doesn't have to be a bullish candle or a bearish candle, as long as there's a little pullback. It's inducement liquidity. For with this now, it has already mitigated our breaker block here. So just like the rules said, first should look for a breaker structure or an MSS for MSS or a breaker structure. So here we have MSS. Then what do? Wait for inducement liquidity. Our inducement liquidity is our first pullback, which is this here. Indicate here. Liquidity is there. First pullback. Then your POI must be mitigated. Our market structure sheet, which was the breaker block coming from company breaker block, was mitigated already. So I'm going to be using that POI. Now we have to use the other block POI. That block POI. And the other POI source we use, which is totally mitigated. Market has not tapped it before. A mitigated POI is where market have tapped. POI that market have used before. BA price has touched before. That's a mitigated POI. So we'll be using there. So now this is what we do. You have to use the other block. Market came, mitigated this other block and buy. So we set our position from here. And buy. Target this side because you don't know if market might reach from here. Target there. I'll tell you on the think on the next course to be on test of liquidity when you get to take your profits. Okay. Next thing is what our other breaker block. So here now we have a break construction market breaking the recent high. This is a fear that we cannot supposed to push market down both feed. For the market I've used before on sale. Like here now, just like this scenario, the market will this sell from here to tap this order block. So that will mitigating a market break above it. Market didn't use it again. This now then called the fade sell order block. Then we have our intimate liquidity, our first pullback, which is our intimate liquidity is here. So our intimate liquidity, our first pullback. The market came, tap our breaker block, we place our block. So for market tap our breaker block, we place our position from here. Place our POF entry from there. Yeah, it is. So here's my main entry model. Here's my main entry model. My main entry model is this. My main entry model is OCR, which I want to go down further into. The other things I use because my ISO criteria, that criteria I use, because I already share that with my private students, I don't share that public. So this will, so long this video is going to be on YouTube, I won't be sharing deep details about my entry model. But my entry model is OCA, but there are other things I use for my confirmation entry. And when I make confirmation entry, it doesn't mean when market get to my zone. I see them inside my entry. I see those things. I see them before place, just like this your POI. Those are my confirmations are. They verify that that POI is going to be strong. So in between these candles is my entry model. Take my entry from here between the candles. As markets open, this my OCM is this candle could open at this point and close here. And next candle from open at where the previous one close and close it. So the open close is where this candle close and this one open. Let's call my OCM. That's for you. Same thing. Same scenario for a sell. Use your two separate. Same scenario for a sell. We have two candles. There is a way I place my stop loss. I'll be sharing that as well also. I'm sharing that publicly as well. My teaching is beyond this, but don't have to give all details publicly for using space, not to me. Take my entry. That's why most times my setups are tight entries. But if you don't know how to do it, if you don't know how to put your essay, where to put your stop loss, don't go and try that off. Let me say don't go and try that off. No, this thing. So, since I use 7 entry model, so let's go to the chart. Let's go to the chart and see how it happens. So for this analysis here, this why I got this analysis. So I get my bias and where my bias was coming from. So I got my analysis. Let me just brief everything with the bias. First of all, I came first. Okay, I was marking my bias here. My bias. So I didn't stress much. Like when I get my bias, I didn't stress much. But I'll give a topic on bias safe, Just mark this high, this low, recent high. Mark this next low. So yeah, just withdraw high, lower low, lower high, lower low, lower high. This. So I was having this thing. I know it was a demand, so I choose it, market to this place. And I get it. And I get here. What I did. So I marked this low. Mark this low. And mark this high. That is a bigger lower high, bigger lower low. So once I trade inside this structure, this is what I did. So I have to mark my structure inside here. Lower low, lower high. And mark it also from this place. So this was the next low, lower high. Market the tab is recent high. So I preserve with that. Lower high, lower low. And I still mark a British recent high. That's the way I mark structure. Mark a block here with a body. I did mark here as an S low because it was under low here and it's this day high. So I mark here as the recent lower low. I was broken with a body. It's in lower high. For here I preserve this place because the market is going to come up tap here, this other blow. So I preserved here. So I'll say I got that entry. So I didn't take my TP that much. So to take my TP as is onto here. I'll show you a bit before, then and the after. So this was it. So no market then was buying from this one, buying from here. So that block here. So that place already mitigated. So what did I do? This recent high was broken. This recent high was broken. Successful in markets. So there is something like order flow. Successful in markets coming from. But some markets made MSS here. Markets smoking lower low, lower high, lower low. Which also this one was reacting. Lower high. Made the first pullback, which is pullback with liquidity. I'm going to take this breaker block. So it's a breaker block. The market breaker that is low. We have the market was buying from there, so I don't think I'll be pulling down below there again. So yeah, this is where you see my entry mode. Here's my position. So right here, what was also I was having? Okay, something like this. Come to this low. Market gave me an MSSC. That's what I was saying. This was a false break of structure. Just take all this because market needs to break with a body of a candle and not a wick. This broke with a wick. Was the first break of structure. And here was the one that broke with a body. This one was the one that broke with a body. So where's my entry model? This is my entry model. OC, I said. That's my OC. Yeah. The OC. Here's my liquidity. My OC was now also mitigated. Market data. There's my stop loss. Also markets tap in. Say buying. This was 162. 162 restore reward. I'll say 162. Just to restore reward. Then let me trade it before I trade that thing at down Telegram. Share it on my Telegram. That was last week Monday trade. Last week trade. This was the trade. This was the before. It was before. It was before the trade. This was the before. You can see here's my OC here. My entry mode there. It was the before. It was the before. And this was when the trade triggered from my OC here. Then it was moving. It was moving. So this was how I got this till before this year. Let me retrade this here. Same model. So yeah, I marked more other blocks that time. This was the other block I marked. The 15 minutes that time. So clear that block here so as well. It quickly delete all this. So clear that block as well here. So I was going to go. I go to lower limit to look for over time for look for mainstream. This was what market did. Same market my social market was making higher highs, higher lows, higher highs, higher lows. Make sure it's drop stable body, higher high, higher low. This is my first pullback. I don't even do this simple count. My first pullback. This was my first pullback. Okay, came out slow and see. I went up a little. Pull down. So that was my decimal liquidity. So what I did, I took reversal because market pages since lower low, lower high, sorry. Higher low, higher low. In the break of structure here, you must break the body. Structure here. Then did this. So I will take my entry from this host here. So let me show you something. The reason why something I do use. Maybe market tick reverse exactly from that place. I use week, the week of something. I do use for my that is my permission zone. So I use week then. You will see this. Just keep an eye on this black color, this black line. Market zone two. This black place. I'll show you something like that. I think show you something like that. You can see for this thing. So let's keep an eye on that black line. Market jitter exactly from that black line. Just almost shows praise stop loss. That's why I call this sell. Same entry model. This I call this buy. So what market same entry model? I'll show you on Telegram. This was it sell. When it said gold triggered. So it was 7. I think when it said gold triggered, so suddenly I asked them to close your trade. The reason why I asked them to close your trade was because I was expecting a buy. At first, they said they triggered me. At first, so I got a re-entry hard for this sale. This was when I told them to close your trade. Close or done for today. Because I was expecting a buy, which was this buy. So this buy was for 20 minutes. Same entry model, just keep an eye on it. Same entry model. First time to press my instruction. So I add this lower low, lower high, lower low, lower high. In this liquidity, as my first pullback. This was a market blocks with the MSS here. Made a break of structure here. This was my OC here. This was my OC here. This is my OC here. That was where the buy came from. As a week I use for tight stop loss, which is, I mean, look for it whether it's here. Because I've seen it. So yeah, week I use for tight stop loss. Market reverse cycle from that week. You can see it. Is it? Service like this. How weak is for yourself per major entry? That week just, I think that's when just for my students. Also I got this buy. So I got this buy from here. You can see. So I got this buy. The first sale. The first buy. That's why I put this 3 trade in one day. So I put the 3 trade in one day. Symmetry model, the first buy, the sale, and the third buy. 3 trade in one day. So the next topic will be on, which is will be on liquidity aspect. Next topic will be on liquidity. So thank you for your time, and I hope you had enough knowledge. Thanks.